Ladies and gentlemen, good day and welcome to the Bajaj Electrical Q1FY23 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Deepak Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thanks. Good evening all. On behalf of PhillipCapital India Private Limited, I welcome you all to Bajaj Electrical Limited Q1FY23 earnings call. Today we have with us management represented by Mr. Amit Poddar, MD and CEO, Mr. E.C. Prasad, Chief Financial Officer. Without taking much of time, I would like to hand over the floor to the management for their opening remarks, post which we will open the floor for Q&A. Thank you so much, and over to you, sir. Thank you.
Thank you, Deepak. Good evening, everyone. Thank you all for joining us on a late Friday evening on the eve of a long weekend. So I know you're all looking forward to the weekend. But thank you for being with us today for this call. I'll just make a few short opening comments. I'm sure you've got a chance to go through our results as well as the investor deck that we've released. I'm pleased to report that we've had a healthy and good quarter, and it's a strong bounce back from the last two, Q1s that we've had. Just, key headlines from my side. Our consumer business has continued to demonstrate good traction with good growth of about 58% Y-on-Y basis. Our EBIT, has bounced back in the consumer business, unlike a soft quarter that we had last year in Q1. We're maintaining our growth rate on, and the focus on EBIT. This is for the consumer business. Importantly, for the EPC segment, this marks the second quarter in running that we've demonstrated profitable break-even results. We hope to continue to maintain that trend going forward. From a balance sheet and cash flow perspective, which we've always been very focused on, and this is, we've continued our track record of demonstrating strong cash conversion and positive cash flow with cash from operations amounting to about 166 crores. While we'll talk about the operational aspects of all the business segments and product categories which we continue to do well, I do want to call out our illumination business, which continues to gain market share, has demonstrated growth on the top line and continues to inch up on the margins and profits that it earns. And lastly speaking, I just want to point out that this is a quarter under which we've undergone transition of our operating ERP system. We've transitioned to the latest version of SAP S/4HANA. To that extent, that transition happened sometime in May, and as part of any such large transition, there is some disruptions and teething issues. So we faced some of that in this process of transition in the month of May, and these results are despite the transition and certain amount of sales losses that we had in the month of May as part of this transition. So with that, I'll hand it back to Deepak and happy to take on questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. A reminder to all the participants that you may press star and one to ask a question. Once again, a reminder to all the participants that you may press star and one to ask a question. The first question comes from the line of Chirag Lodaya from ValueQuest. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers. So my first question was on gross margins. QOQ, if I see, your gross margins are up by almost around 350 basis points. However, QOQ consumer margins are flat. So just wanted to understand, where is this discrepancy coming?
Chirag, the gross margin you may be seeing is on a consolidated basis, and therefore it's a blend of the consumer business, illumination business, and consumer business. So it's a little misleading. But at if you look at our segmental results where we report our EBIT margins, etc., it's kind of flat on a Q1Q basis. But also, if you look at from a 3-year perspective, it's similar to, of course, the significant improvement over last Q1, but I would look at last Q1 as an aberration. But if you go back 3 years, we've maintained that margin, and that's despite that this year yet factors in significant commodity inflation and headwinds in this Q1 results. If you compare that also, I think the fact that we maintain those margins on a 3-year basis is demonstrable of the fact that at an underlying level, we actually, delivered improvement in our margins on a real basis.
Okay. And in terms of margin trajectory ahead, how we should look at it on a QOQ basis, will see significant improvement, or you still feel there will be some pressure in initial quarters before, we start improving on overall margins?
The commodity inflation cycle started in about October, November 2020. That has gone on till about May 2022, which is this year. We started to see a little reversal in the commodity inflation and cost since June of this year and continuing into July. So to that extent, we expect margins to start improving from Q2, but the full benefit of this commodity cost reduction and margin improvement will be seen in Q3. But here on, I think we are at the bottom of the margin, and we expect to deliver higher margins going forward.
Right. And just lastly, sir, if you can also share 3-year CAGR growth for appliance, lighting, and more features, that would be helpful. You have shared on fans in the presentation.
Yeah. So we don't have that 3-year that we carve out on a subcategory level, 3-year CAGR, but on a overall basis, I think it's about 7.4% on a 3-year CAGR basis for the consumer business.
Okay. Thank you and all the best.
Thank you. Thank you, Chirag.
Thank you. Next question comes from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thanks for taking my question. First part is, what was the impact of this system upgradation? You talked about there was some impact on sales. Would you be able to quantify it?
Hard to quantify specifically. We had about 10 days of disruption because of the system, and therefore equivalent of 10 days loss of sales. I would say some of that we were able to recoup or make up in the ensuing days, but approximately I would, if I were to hazard a guess, I would say anywhere between 30 to 50 crores maybe a loss of sales that we've seen in this quarter because of this. I just want to add to that, this is phase 1 of SAP. There's some further implementation of systems that is going on now that will go on for another 3-4 months. But impact due to that now will be minimal. But just to tell you that full implementation will happen by the O&D quarter, but we've seen the bulk of the impact happen in Q1. We don't expect any significant impact going forward.
Got it. And so just looking at the CP performance, 3-year should...
Nikhil, I'm sorry, your voice is breaking up now.
Is it better now, sir?
Mr. Nikhil, please go ahead with the question.
Yeah, I was saying you mentioned that the CP performance 3-year CAGR at 7.4%. Looking at the kind of inflation that we have had, that would kind of imply that the volume growth would be maybe in low single digits, right? So yeah, just wanted to get some idea on how are you looking at demand. I mean, we gather from other companies that demand has kind of slowed down in the last quarter, but what is the sense that you're getting, especially for some of the key markets for you, which might be different from some of the peers?
Yeah, so first let me tell you about the weakness and then let me tell you the good news. Since about 20th May or last week of May, there has been a visible slowdown in demand in the industry. I think that's across the board, and therefore that's factored into our Q1 results also. June has been weaker demand. April, May was largely better off. We've seen some of that weakness continue into July, but August, September, we expect to see a strong bounce back. One is actually so far in August, we are seeing some signs of bounce back, but I also see that getting accelerated because we have an early festive season this year. Diwali is on, I think, 24th October. Other festive dates also come in earlier. And to that extent, I think the primary sales will see a pickup in August, September, and therefore we are confident that Q2 will see a healthy bounce back on an overall basis. The one part where the jury is out really in terms of, in the economy in the later part of the year, what will the demand trends, etc. be? Had the inflation continued at the trajectory that it was at, 2-3 months ago, I would have had a slightly softer view. Seeing some of this, at least on our side, cost pressures and inflation come down, I do think I would be slightly more optimistic now than I was 2-3 months ago, and we may escape a demand slowdown in the latter half of the year, which means net I'm yet optimistic that Q2 you will see a bounce back in these 2 months, but Q3 may end up being a decent quarter and not a bad demand affected quarter.
Okay. Thank you. And on the margin front, so I think we've done a decent job in maintaining our margins in the consumer product business. But now with some of these tailwinds kind of coming in on the commodity side, also with the expectation of improving demand, what is the outlook on the margins going forward?
So our long-term outlook on margins is good. If you minus these 2 years of COVID, we had given a strategic guidance that we will, we are very conscious that as a company we want to expand and widen our EBIT margins on consumer. We had given a guidance of about 1 percentage point per annum. COVID or this commodity has impacted us, but we expect to get back to that on an absolute basis. So I think we would exit this year at a good, healthy run rate and get back to the original trajectory by next year. While I don't want to give you a specific number guidance, we are clearly targeting a double-digit margin in the very near future.
Okay. All right. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Parth Gala from JM Financials. Please go ahead.
Hi, thank you for the opportunity. 2 questions from my end. One is if you can just talk a bit on the rural side of the business, because that was one area which was under some pressure, and Bajaj has a bigger presence in these markets compared to the peers. And secondly, an update on the demerger of the EPC business. What would be the status of that, and do we still maintain the target date? Yeah, those 2 from my side.
Parth, your voice was not very clear. First was rural side and second is demerger. Is that correct? Okay, I'll go ahead and answer. I think that's what I heard. So rural side of the business, if you recall our commentary from Q3, rural demand has been weaker than urban because our contribution or weightage of rural has been higher. So therefore, on a consolidated basis, we've had a slightly elevated impact of the rural slowdown. My guess is with a good monsoon, good MSP, announcements by the government, etc., we expect by end of Q2 stroke, Q3, to see a bounce back in the rural demand, and we should be beneficiaries of that. It's a little early to say, but that's our outlook right now on the rural demand side. On the demerger, the schemes have been filed with the stock exchanges. We've had 2 rounds of iteration on terms of queries with the stock exchange. When I say stock exchange, that includes SEBI-related queries that get routed through via the exchanges. We would expect, unless there's any further queries, that we will have full approval from the exchanges within this month, post which we will be filing for NCLT approval. It is very hard to put a very specific timeline to NCLT. I do understand that there is some vacancies in the NCLT, because of which that process may be longer than originally anticipated. Our internal target for that was to actually get the approvals by the OND quarter this year, but latest by fiscal end. I think currently it looks like fiscal end, which is a JFM quarter more likely, where we should have all approvals. But we will keep updating you as and when we have more visibility on this.
Thank you so much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Hitesh Tonk from ICICI Direct. Please go ahead.
Thanks for the opportunity, sir, and congratulations on a good set of numbers. Sir, my first question is on the pricing front. Sir, how much price hikes have you taken during this quarter?
So, Hitesh, we had taken approximately a 5% hike on average across various categories in the month of April. We had planned a further hike in May, June, which we did not take given that the visibility of commodity prices starting to cool off. So we do not anticipate now any further price hike, at least visibly as of now.
That's great. Okay. Sir, the second question is on the our advertisement expenditure front. This quarter we have seen a kind of increase in the advertisement expenditure to about 3.7% of the sales. So is this a kind of expenditure we are going to maintain, or will it be a slowdown going forward?
So our general guidance has been that, ad expense will be between 4 to 4.5% on an annualized basis. It has been slightly lower in the last 1 or 2 years. As the COVID or margin pressure goes away, we actually expect to normalize it at 4 to 4.5% on an annualized basis. On a quarterly basis, there will be some swings based on seasonality of campaigns, but annual basis, that's the number we expect.
Okay, great. And so my next question is on the Morphe Richer front. We have seen a kind of a decline on that segment. So is there any specific reason you want to contribute, or is it a kind of a normal phenomenon in this quarter?
No, I don't think it's a quarter phenomena. So two answers to that. Number one, in this last 12 months or 15 months of significant price increase, there's been, the conflict between the online and offline channels has been very acute because pricing strategies by both channels have been very different. And I'm not just talking about us, but the players in the market. To that extent, Morphe has borne a much greater brunt of this channel conflict given its unique positioning and, its scale and niche, segmentation. Going forward with this pricing, hike kind of stabilizing, etc., we think the price conflict that has been there between the channels will normalize, and therefore to that extent, the brunt that Morphe was bearing will now, ease out. But the larger strategic view on that is, so far, as you know, we've had short-term relations and deals with Morphe. Now we've signed a 15-year relationship. On the back of that, we are now putting together a completely revamped strategic roadmap for growing Morphe business, including a complete re-look at its product portfolio and go-to-market and brand strategy. That will play out over the next, 18 to 24 months, and we have a very clear visibility on how we'll drive that growth. But some of that is something we'll start seeing from next year onwards in terms of the results of that plan that we're rolling out.
Okay. And sir, my next question is on the market share front. We have gained a substantial market share over the last 2 years in our different product categories. Was it continue currently in this quarter also? And if you can share some market share for the leading products, that will be great.
Yeah. So while we don't publish market shares, in numbers, we have gained market share, particularly in fans, where you see our growth has consistently been, higher than industry the last, 4 to 5 quarters. Lighting, we are starting to see greater trajectory versus before. So I'm sorry, I'm seeing is that I'm audible, right? Yeah. Lighting, consumer lighting, we've been gaining share. We've gained share in this quarter too. We expect that to continue. Appliances, where we've had a dominant share, we are looking to defend that, and we have other segmented approach where in certain segments within the appliance business, we expect to gain share.
Okay. That's all from my side, sir. If I have more question, I will come in the queue. Thank you.
Thank you, Hitesh.
Thank you. Next question comes from the line of Akhilesh Bhandari from ICICI Prudential AMC. Please go ahead.
Yeah, good evening, sir, and thank you for taking my question. So you mentioned that demand is improving and also that now that the commodity prices have also softened a bit. Can you just, give your qualitative comments regarding how much, given the relatively higher competitive intensity in almost all the categories, how much of the commodity price decline benefit perhaps would have to be passed on to the consumer or would be passed on to the consumer by the industry, and how much can be kept?
So, to be honest, Akhilesh, some of that is more tactical and, different players have a very different approach to, how they balance between margin protection versus, price pass on. From what I know, a couple of our competitors have done that in June/July. But I would, not react to every tactical move because, we have our trajectory and what we are planning to do. So I don't see any fundamental shift happen on that. Those are more short-term tactical things in a particular month. Directionally, structurally, I think, we will see margin increase for all of us, including, Bajaj Electricals. And at an overall level, we are confident that we will see margin increase while yet continuing to drive market share growth. So that on a not just long term, but even on an annualized basis, we will deliver on both of these aspects.
And sir, looking at whatever price increase and what you have taken over the last 1 year, and also comparing that to what has been the commodity price increase, till the end of the first quarter, what was the gap between the price increase versus your blended cost increase? Just a broad number if you can give.
Yeah. So at a very broad level, I think, for the last 4 to 5 quarters, we've been running at a lag of 2 to 3 percentage points because of this calibration between when we're taking a price increase to the cost increase that we've been facing. That would have been the case in Q1 also, had the commodity costs not started softening up. So I think from the second half of this quarter when we've seen that, and therefore that has started to reverse out. I think by August 15th onwards, that should have neutralized. So without taking a price hike, I think August 15th to about September end, we should be back to, having fully covered for or negated the impact of the cost side pressures that we had.
Understood. And so last question from my side. So a couple of players who had hosted the call or who declared the results earlier had called out, some amount of channel destocking because of the expectation of price cuts by the brands. According to you, has that effect now ended, or some of that is still continuing in August?
Akhilesh, to be honest, because our model is different, we do not have channels carrying significant stock because of our TOC model, etc. So in general, our channel stocking, except for certain product categories where they may have had a scheme for which they've done that, we do not have that problem. So I frankly don't have any data to share with you. We do not have that either on the high stocking or on the need to clear that out in an upward or downward level, either which way. So our primary and secondary sales are typically more closer to each other most of the time.
Got it. Thank you. I'll get back in the queue.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Charanjit Singh from TSP. Please go ahead.
Hello.
Yes, Charanjit, good evening.
Good evening, sir. Yeah. So on the appliances side, if you can, give more color, on the mixers, water heaters, while it was not a very seasonal quarter for water heaters, but how these categories are performing for us and how is the outlook, because now kitchen is one of the segments where we are seeing, increasing focus from a lot of other players also. So, how we are trying to position in terms of economy versus premium within these categories. That's my first question, sir, on the kitchen appliances side.
So Charanjit, on an overall, we've given appliances growth. It's a healthy growth that we've had. Our focus in appliances, while fans we have a significant premiumization that we're chasing. Appliances we are not that far out, but there is sub-segments as I mentioned initially where we think there are certain white spaces or weaknesses. So at a sub-segmental level, let's say mixer grinder of 750 watts and above, etc., that we have pockets that we need to strengthen. Similarly on water heaters, certain types of water heaters, etc., where we're looking at strengthening, and so on and so forth for different appliances. The other approach to that really is at a geographical level. While overall we are strong, there are geographical pockets where we need to strengthen market shares. And the third piece is really between urban and rural. So for us, the appliance strengthening is coming from these tactical things, either at a sub-segmental level where we're playing that. And because we know we have some of those gaps which we're actively working on, therefore we are confident that, while you may have more competitive intensity and new players coming to appliances, we do have growth avenues as we fix each of these things and we will gain market share on an overall basis.
So, sir, as a category, kitchen appliances, what will be the market growth which you would be expecting? And from our growth perspective, can we be higher or in line with the market?
So if you look at an overall industry level, which is not the top 3 or 4 players, we have been and we will continue to have higher growth. So which means gaining market share. There will yet be the long tail unorganized players that are losing share, and we will continue to gain share. But our game is not just against them. So even amongst the 3 or 4 players, the earlier points that I mentioned, we know that we are under, more intensity of competition in this appliances category. But we do have a clear vision and roadmap. We will see a lot more launches in the next few quarters, which will demonstrate our plans for this, these categories.
Okay. And sir, on the lighting side, in terms of the B2B market, how is that, shaping up? And when do we start seeing, these new launches, battens, panels and downlighters starting to, contribute to the, lighting revenue? And how large is the potential for these, new products which you've launched in the lighting side?
You said B2C, right?
B2B, how that is, going to scale up, because that is where we are hearing from the other players.
I was confused the panels and downlights, because that's on the consumer side. So let me first talk B2B, or the professional lighting. That's the part that we've done very well last 2 years. We've turned that business around. Even if you look at last year, which is full year FY22, in a market that degrew, we actually had growth, and which means a significant increase in market share. We are almost close to number one in the professional lighting, B2B lighting space. This quarter too, we've had a growth, small growth, but growth in a market that has degrown in this Q1. Our bottom line of profitability in that turned around. We had a break even last year, and this quarter we've had a certain slight further expansion of margins. We will continue maintaining both these trajectories. That is, driving top line growth. Sorry for that. We will continue to drive, growth on the top line in B2B, though that may be single digits, because overall market industry is weak, and we'll demonstrate growth and expanding margin in the bottom line. That's on the back of many launches. That's more sector or vertical focus, stadium, metros, indoor, street lights, etc. It's a very segment, sector-driven product strategy that we have there. Hello. Good for us. On the B2C side, which is the consumer side, that's been the big delta for us, because that's where we had been lagging significantly. We did not have the right product range with us. We were not LED focused. Our share of LED is now between 85 to 90%. That's a continuous improvement that we've had. Within that, from conventional lamps, our share of downlighters, battens, recessed panels, etc. is increasing. And you'll see a lot more launches on that on the B2C side over the coming quarters. And lastly, structurally, we have from 1st of July carved out and created a unified lighting segment, which is a consolidation of the B2C and the professional lighting. And on the B2C, which is consumer side, we are now creating a separate go-to-market or sales team, which is not what we had earlier. That will be fully in place by end of September, so you will see the benefit of our revamped go-to-market also on the consumer lighting side.
Thanks for that answer. Just last question from my side. In terms of mix of in-house manufacturing and outsource in appliances, lighting and fans, if you can just share that number.
Yeah, so our in-house has been between the 15 to 20% range. Our guidance has been that will continue to grow marginally. 3 years out, that should be closer to 25-30%. But what's changed and is continuing to change even within this right now is the mix of what we're making in-house versus what we're doing outside. So, for example, the mixer grinders that we never used to do in-house, now we're assembling those in-house. The capacity or range of water heaters that we're doing in-house has gone up. In fans, which we used to do in-house, we've moved up. We've set up a new paint workshop, etc. So from making just lower-end sub-economy ceiling fans, you will see us start to move that upwards to making more premium fans in-house. And lastly, on lighting, which is, I think, more commoditized, that is where we're reducing our mix of in-house manufacturing. So, at the overall company level, it will increase, but the mix in that across these product categories is changing significantly. That's driven more by a strategic agenda in terms of what we want to focus on internally.
Thank you. Next question comes from the line of Charanjit Singh. Please go ahead.
I think we finished with Charanjit. You may want to move to the next participant.
Next question comes from the line of Rakesh Roy from Insec Securities and Finances Limited. Please go ahead.
Yeah, hi, sir. So my first question is regarding, sir, can you highlight your, sir, for next 1 year, sir, in new launches or new product addition in your CP business?
Sorry, I didn't get it. Do we have new launches is the question, or what are the new launches?
New launches and product addition in CP business.
I mean, we'll keep continuing to have that. Like you've seen in the current investor deck also, we highlighted some of these launches. We will have that across categories. My guess is what you will see in the next Q3 and Q4 will be more than what you've seen in Q1 or Q2 that you will see. But in terms of specific launches, of course, for competitive reasons, we'll rather share that as and when we make those launches. Yeah.
Sir, are any plan to add any new product in your CP business in near future, in next 1 or 2 years, to increase your basket, sir?
So, in terms of, if you mean as a subcategory or category by itself, yes, we're evaluating various things, but as and when we are ready to, have firmed that up or announce that, we will do that.
Yes, sir. For an example, you try to enter in a switch or wire business like in.
So that I can confirm to you. We're not going to do switches. We are not looking at doing wires and cables, and we're not looking at large white goods, refrigerators, air conditioners, or for that matter, water purifiers. At least these are clearly something not on the table for us.
All right, sir. Sir, can you share your volume growth in CV business? How much the volume is there?
Volume growth in Q1, you mean?
Yes, sir.
So Q1 has been significant volume growth. If you look at, the fact that we've had about a 5% price increase, to 57% or 58%, revenue increase. So rest is all contributed by volume growth here.
Okay, right, sir. Okay. Thank you for my side.
Thank you. Next question comes from the line of Harshit Kolecha from Flare Capital. Please go ahead.
Good evening, sir.
Good evening, Harshit.
Yeah. So are we planning for any inorganic growth in future, sir? In near future or something? Say after two or three quarters or something like that?
So Harshit, that's very speculative. Of course, this is the opportunistic as in when, we get an opportunity that makes sense, let me just say that every opportunity that comes, we do look at it now, which is a change from 2 years ago when we were not even looking at those. So we do actively evaluate every opportunity that comes. But finally, it has to meet our strategic and financial, parameters. And as and when that happens, then we'll be happy to share that.
Okay.
We are very open to inorganic also. Whether or not something will happen, time will tell.
Okay. Our interest will be without white goods, right? Not ACs or washing machines or like that.
Yes. We will not look at white goods or ACs even in an inorganic way.
Yeah. So our plan will be only for kitchen and etc. Correct?
It's hard to say what we may do. It may be closer adjacencies, etc. But I can rule out AC, refrigerator, etc.
Acha. Thank you, sir. All other questions of mine were answered. And congratulations for a good set of numbers, sir.
Thank you, Harshit.
Yeah. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Akhilesh Bhandari from ICICI Prudential AMC. Please go ahead.
Yeah, thank you for taking my question again. Sir, can you give an update on Nirlep? How is it scaling up? You were looking to improve the distribution and product launches in that area. So how are things shaping up there?
To be honest, Nirlep is yet right now relatively weaker than many of our other product categories. I think it has a long way to go. Some of the scaling up of distribution, etc., while we've done that, the benefits of that are yet to play out. I think we're going to be another 3-4 quarters before we see real improvements in the Nirlep. So right now that is a soft performance for us. One other announcement related to Nirlep, which our board has approved today, it's an enabling provision to review or evaluate ways and means of consolidating Nirlep into Bajaj Electricals. That's in line with our overall intent to simplify our corporate structure and have minimal entities as required so that we can do that. So that's an in-principle approval. We will now work on specific modalities, options to drive that consolidation and then, come up with a scheme at the right time.
And given that you're implementing a lot of things and looking to gain market share across segments, so how does that, can you just call out what is the order of priority for all the things? Because you're looking to do things in Morphy Richards, Nirlep, gaining market share in fans, lighting. So what is the order of priority, if you can call that out?
Good question, Akhilesh. And, we have a lot on our table, fans, lighting, our normal appliances, Nirlep, Morphy, etc. that you said, besides all the other organization things. So we have to keep balancing these things. As a principle, we are aggressive, which means internally also aggressive in pushing a lot of these things, but we're conscious that we don't push to a break point. If I just put it in a more obvious sense, the larger, things that we have to solve for or which are greater delta is priorities. Of course, fans, lighting, etc. is now much larger for us today, and therefore you're seeing more movement from us right now on that piece. As we start to see some of that to, it's already starting to fructify, but as that starts coming to an autopilot mode, therefore, for example, Morphy, I told you, another 18-24 months out is when you'll start seeing more movement on that, and so also for Nirlep. So we have sequenced some of these priorities out, and you're seeing that in terms of what we are reporting also.
Got it. Thank you.
Thank you. Next question comes from the line of Chirag Muchhala from Centrum Broking. Please go ahead.
Thanks for the opportunity. Two questions. So first is on the, just as a continuation of the previous question. So for the two other subsidiaries and associates, which is Starlight Lighting and Hindelands, any plans to keep them as a separate subsidiary or integrate them also with Bajaj, and specifically for Q1 and near term, how do you see that impacting our overall financials in terms of, these subsidiaries, making losses or, needing further capital infusions from Bajaj standalone entity?
Chirag, I'll just ask our CFO EC to update on the status on the Starlight, and then maybe I'll try and answer a question on the impact.
Sure.
So the status is for Starlight merger is that it's in the final phase of the NCLT approval, and we expect the approval from the NCLT to be received by the end of Q2 or latest by the beginning of Q3. That's the update as far as the merger of Starlight is concerned.
In terms of impact or benefits of that, mathematically it's the same thing because all the results of that fold into consolidated results of Bajaj Electricals. That said, in reality on the ground, having two separate entities does create more work for us. It ends up requiring more resources in terms of people, and there's a constant funding exercise required because Starlight, as as a legacy, has had funding losses and funding gaps. So the fact that once it's merged, I think some of these irritants or things that drain energy or time or funding optimization, I think to that extent you will see an improvement and make things far more seamless and smoother for us. And therefore, I wouldn't say that's a significant, huge any profit bump up for that, but at least some, smaller to a smaller extent that efficiency should improve with this in consolidation. And the same will hold true for Nirlep as in when we execute that, which I've given a guidance on the earlier question.
Sure. And on Hindelands, sir?
Nirlep, right?
No, Hindelands.
So that is all done. There's nothing now. So with Inlamps, the operations that were there, they were demerged from Inlamps and had folded into Bajaj Electricals, I think 2021, 2020. So there's nothing further to be done really on Hinlamps now.
Okay, sure, sir. And sir, just for the sake of accuracy, the four subcategories that we have: fans, appliance, lighting, and Morphy rejects. Is it possible to give the revenue in absolute terms? I know in PPT you have given percentage growth, but since Q1 last was a very abnormal base, if it's possible, can you please give the revenue in value terms?
So Chirag, to be honest, we did give that out in our annual deck at the end of Q4, but on a quarterly basis, we'll not be able to do that for competitive reasons because none of our competition does that yet.
Sure, sir. And sir, last question on, especially on fans and water heaters. So while you mentioned earlier that a couple of your peers have taken price cuts recently in June, July, as commodity prices started softening, but we have not taken any price cuts in this category in June, July months. Is that assumption correct, sir?
That's correct. So we've not taken any price cut. And when I refer to competition, that is particularly for fans that I understand two players have done that. Yeah.
Okay, and we do not even see any need for price cuts, considering that fans, unfortunately, as you mentioned, that post 20th May there was softness. So part of the summer season was lost in terms of secondary sales, and channel still has inventory. So there is no likelihood of us taking any price cuts in fans. Is that assumption correct?
Yeah. So as on today, I don't expect. Time will tell in future if something else changes. The other aspect in fans to remember is that the compulsory star rating is kicking in. It's this July to December is a transition period, and from 1st Jan it will be 100% implemented. To that extent, in a normal case, one would have seen a price increase, cost increase to comply with the star rating and energy efficiency. But given that the commodity pressure is up, maybe one will be able to drive that conversion and offer energy efficient fans without a price increase. But therefore, to that extent, on an overall basis, a price reduction may just neutralize versus this transition to energy efficient fans.
Okay, sir. Okay. Thanks a lot, sir.
Thank you.
Thank you. Next question comes from the line of Akash Fadia from Yes Securities. Please go ahead.
Hello, yeah, thank you for the opportunity. So where are we in our logistics cost saving initiatives currently? So has full benefit been realized or we are still undergoing cost?
No, Akash, my short, candid answer is we've not yet realized the full benefits of that.
So how long it will take to realize the complete benefits of this initiative?
I'll again be candid. We should have had it by now. We've not had it, but we are on the job there. Yeah.
Okay, thanks a lot. And best of luck for future.
So much.
Thank you. Before we take the next question, a reminder to all the participants, please restrict yourself to 2 questions. The next question comes from the line of Achal Lohade from GM Financials. Please go ahead.
Yeah, good evening. Thank you for taking my question. While you did talk about the volume growth, implied volume growth on a YY, is it possible to have some color in terms of how the volume growth 3-year CAGR given last 2 years were impacted because of COVID? 3-year for fans, lighting, water heater, small appliances.
Achal, we'll have to look at that, at a 3-year category level. Maybe we'll come back to you on that piece here. Yeah. Again, my short answer is if you look at FY22, in most cases there was a volume degrowth. So the growth in revenues was driven by price increase. I expect that to start reversing out. This year, you will not have that much of a price increase. So any growth that you'll have now will be driven more by volume. But on a 3-year category wise, we will have to look at that and come back to you.
Understood. The second question I had, specifically with respect to the lighting business. Now, like you mentioned, you've gained significant market share in the professional lighting. Can you help us understand what the market size for consumer and professional lighting, and what are the key changes which you have done to see this market share improvement in both consumer and professional side?
So very broad numbers on the professional lighting. Industry size should be about 4,500 crores, and on the consumer lighting, about about 10,500 crores. Okay, that's a very fragmented market, particularly in consumer lighting. There's a lot of players, etc. Sorry, the second part of the question was what have we done to drive market share?
Yeah, you mentioned professional lighting has seen a decline in terms of the industry.
Yeah.
Growth, and I don't think you commented specifically on the consumer lighting, how that industry growth has been. Has that also seen a decline, or it's kind of stagnated, or seen any growth?
Consumer lighting is not seeing so much a decline on an overall basis, but there I think we're seeing, it's a very, very fragmented long tail industry. There we are seeing a much sharper shift from the fragmented long tail unorganized or smaller players to the larger players. I think that trajectory will continue in the next 2-3 years because it was a long tail because it was operating at the very bottom end of the market, a very commoditized, cost-driven, and this was, if you look at from a 3-5 year length, LED prices have been continuously coming down, and therefore it had become a very price-driven market. LED prices, the rate of reduction or price erosion has really bottomed out, so it's no longer a price-driven market, and therefore it's moving to a proposition or product-driven market, even on the consumer side. And as that happens, that helps or acts as a tailwind for the larger, better quality players with better R&D, and therefore we see a market share increase happening for us and or other leading players where we will deliver on that growth and increase in market share on the back of better products. For us at Bajaj in particular, I do think we were behind the curve on consumer lighting, not just on the shift to LED, but introducing value-added products, battens, panels, downlighters, etc. But that's the catch-up that we're now playing, and we will play that aggressively over the next couple of years, and therefore we are confident that we will gain in the consumer lighting. Yeah.
Understood. And just last question, if I may, if you talk a little bit about how you've strengthened the leadership team, for this business, I think that also help understanding the thought process here.
Sorry, Achal, I couldn't hear. How have we strengthened what?
Leadership team in terms of the various product segments.
So, we made some public announcements. The most recent key announcement is we restructured. So the lighting business, which was split with consumer lighting being part of overall consumer business and professional as EPC, we brought it together as one unified lighting business segment. That is headed by Rajesh Nayak. He had joined us in December 2019. He was heading the professional lighting. He's been instrumental in turning that round and growing, and now will drive the overall lighting business. Under him, like I mentioned earlier, we're setting up, so we have now got a dedicated lighting sourcing supply chain team for this. We've got a dedicated lighting quality, lighting marketing. We're beefing up all of those functions under that. And most importantly, a go-to-market, a separate sales team for consumer lighting, which is not what we had earlier. On the leadership side, on the other hand, on the consumer business, which is rest of the consumer, that is fans, appliances, Morphe, Richards, Midlet, etc. We've got a new Chief Operating Officer, Ravindra Singh Negi. He's joined us. He was the head of the consumer products business at Havells. He's joined us in July. Therefore, we have an integrated, strong leadership in place for that. Under each of these, of course, we have the second line of leadership that we have strengthened and are continuing to strengthen. At a corporate side, similarly, we have strengthened the team, and we will continue to do. What is not visible is more the middle and junior management or junior levels also. There's a lot of churn that is happening in terms of strengthening the talent pool that we have. So overall, as an organization, we are a very different organization, and that investment in talent is something we are very committed to, because I think that will be key to professionalizing and performance going forward here. The most recent one, if I may talk about it myself, is the announcement that we made today of also splitting the chairman and MD role. So Mr. Shekhar Bajaj will now continue as chairman, and he's relinquished the MD role and passed that on to me.
Great. That's very helpful, and congratulations for your promotion, sir. Is there anything left to be done, which is still kind of significant or meaningful, which is yet to be done?
Absolutely. There's lots and lots and lots left to be done. So, if you also see one of the other decks we put out, this is only Horizon 1 in our strategy. To deliver Horizon 2, which is really about growth and operational excellence, we have our hands very, very full. So we have a very clear roadmap. We have many initiatives to do, and we are very committed to delivering on those. So, yeah.
Got it. Thank you, and wish you all the best. Thank you.
Thank you very much.
Thank you. Next question comes from the line of Amit Mahawar from Edelweiss. Please go ahead.
Yeah, hi, Anuj. Congratulations on your new role that you've got. I just have one question, sir. Basically, as you consolidate the entire business structure, what is the specific allocation to each business? So, you talk about Nirlep or you talk about Starlight. I just want to understand maybe in the next 1 to 2 years, how much is going to be the investment in each business specifically? Yeah, that's my big question. Thank you.
It's hard to quantify that way, because that's not the way we look at it. Each business, whatever it requires, we will make that happen. Our view is these are not really financial investments. They are all, look at consumer business, all lighting business, and now the rest of EPC. Financially, they're all, profitable. So they will have internal accruals to do that. So except the one piece I'll put out is some capex for manufacturing, which I've been guiding that 15% going up to 25-30. We have that in the back of our minds, but maybe that's a 2024 thing. We will come back at that point to look at that. But again, that will not be some 300-500 crores. It will be maybe a smaller number than that. Yeah. In terms of to me, the investment is not so much on money but people, and therefore this focus on strengthening management, leadership, talent across the board. Because like I answered to one of the questions earlier, we have a lot to do. If we have a lot to do, we cannot do all of it sequentially. If we are hungry and aspirational, we have to do a lot of that in parallel. And therefore, that allocation of energy or resources in terms of people, talent, so that we have all of this happening parallel, that is what we are focused on as an organization. So to that extent, our commitment to invest in talent or R&D, so all of these things move in parallel. So 2-3 years out, you should start seeing a payoff on multiple fronts rather than have it all sequential. So I don't know if I was able to clarify or answer the question. But
yeah, fair. And, maybe second question, Anuj, is, generally, we've seen a lot of, leadership rejig in Bajaj, and I think in last 1 to 1.5 year, 2 years, you've actually set a very strong and robust process in the organization. So I just want to understand, how will your appraisal policies be? The ESOP structuring, is it in line with the best? How will you, attract more talent and avoid drain of talent? now that you've set processes and systems on place? Thank you.
The first, a policy or principle statement, our vision is to be the best-in-class organization in our industry. And when I say that for our industry, it's beyond the benchmarks of our industry. We're looking at other, companies in other sectors that have a more superior approach to all of these things, institutionalizing how they run the organization, the org culture, the talent pool, the performance appraisal management systems, etc. And to that extent, there's a lot of work that's going on internally with Consari, with you, with others. We've revamped our TMS. Our variable components are much higher than they historically used to be. Our approach to, driving performance at an operational level is, rejigged. Our ESOP will probably undergo a review next year. We're waiting for the demerger to be completed, and then for both companies separately, we'll also review the ESOP scheme. But this is a continuous dynamic process, so we are very clear what is required, and we'll keep making those changes. The larger, vision to that is to be far more institutionalized. So it is not meant to be driven by one or two people, but can we create an organization that is institutionalized, that can therefore chase multiple, initiatives or goals and work at a far more, greater speed. Again, things like the SAP transition that I spoke about, these are long overdue. And unless we have those robust systems, processes, these are, to my mind, the building blocks on which we will then mount aggressive growth going forward. If I can point back to that investor deck that we put out in early July, and that Horizon 1, Horizon 2 is really about that. So, so really putting in place all those building blocks. We have another 6, 9, 12 months to put that in place. So that next 3 years, we're really going to look at building off these building blocks to have faster, growth there.
Thanks, Anuj, and best wishes.
Thank you, Amit.
Thank you. Next question comes from the line of Chirag Loya from ValueQuest. Please go ahead.
Yeah, sir, can you share the update on NPD as a percentage of sales and premiumization share, how it has, moved for us?
So, we don't normally publish that. We made an exception in that July investor deck to share the contribution of, new product launches to give you a sense that we made significant improvement. Even this quarter, our contribution from new product launches is higher than the previous quarters or Y-on-Y basis, etc. So, that's a key metric that our R&D is driven by. We just look at this number of launches that we're doing. Therefore, that's in a way, pointing to or giving an indication that our share on new product launches is going up. Again, I'm sorry, I'm not giving absolute numbers, but again, if you look at, let's say, fans as a category, fans used to be sub-economy. If you look at the 3 examples that we've given in this today's quarter deck, one is an ABS fan. We never had a play in the ABS segment. Second is a decorative premium fan. Again, that was a large white space for us. And the third is the 4-star energy efficient but inverter technology fan. All of these were, segments that we are not operating in. As we start entering these sub-segments of product categories, our share and contribution coming from these new product launches is increasing. So we have a clear target in the next 2-3 years. We'll see that on par with the best of the players in the industry.
Right, got it. And so is it fair to assume that, in coming quarters, we'll see positive volume growth? And the last few quarters, because of sharp price increase, etc., volumes were under pressure. But is it fair to assume that, remainder 9 months, we can see positive volume growth overall?
That's correct. So, Q2, like I said, will be a blend of some of the legacy inventory, higher cost inventory. But you'll start seeing an improvement in Q2. But I think the more benefit of that should come through in Q3. We should see margin improvement with this commodity cost having cooled down.
Right. Got it. Thank you, Anuj.
Thank you, Chirag.
Thank you. Next question comes from the line of Rakesh Roy from Insect Securities and Finance Limited. Please go ahead.
Yeah, hi sir. I have one more. Sir, can you highlight on the fan business how much the economic segment is contributing, or mid segment or premium segment in fan business?
Sorry, Rakesh, I couldn't hear you clearly.
Hello.
Premium in fans would be about 20%. Yeah.
Okay. And economy and mid, sir?
Economy and mid would be another 20, and rest would then be the lower segments here.
Okay, so this is for Q1 and Q4 FY22. The ratio is same.
No, I said it's slightly lower, which means premium I think was about 14 to 15%.
Okay.
And I don't remember offhand the economy and the mid segment yet.
Okay, sir. For same question, sir. For any target to increase the premium from next 1 year, how much you target for?
So I don't have a numerical target for that, but the fact is, like I gave the 3 examples, we've typically been weak because we didn't have products at all in the premium fan segment, if the question is particular fans. As we are starting to introduce this, and both the Esperanza and Aster models that are there in the sheet, both have got good traction and feedback from the market. But, we're also conscious that 1 or 2 models will not do it. So as we expand that range, we expect to see an expansion in the share contribution of, in those sub-segments here.
Sir, do we see more new launches in premium family in near future?
Yes, absolutely. So and again, we're bracing up for next season. So you'll see that gradually happen right from now till next summer season.
Okay, sir. So overall, we are number 3 and number 4 players, sir, in fan category.
And we're number 4, number 5. So between 4 and 5, both are similar. Yeah.
Okay, sir. We
are number 7 players.
Where we stand in premium, sir, or economy, sir? Can you just highlight on this one, sir?
Sorry, your question, any highlight on premium and economy?
This one, sir. In premium, how much market share we have currently, sir?
That's what I said earlier. So Q1 has been about 20. Oh, market share, you mean?
Yeah, yes, market share.
Yeah. No, we don't publish that, but we will be very small. So while we're number 4, number 5 overall, our rank in premium will be worse than that. So that's the catch up that we're looking to play at. Yeah.
Right, sir. Thank you, sir. Thank you for my side, sir.
Thank you. As there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you very much once again for joining us today. And I know it's a Friday evening, long weekend coming up. Once again, I would like to, say that we are happy with our Q1 results. I would like to acknowledge our team that is delivering this. We remain confident about what the future holds for us, and we are committed to add value to all of you. Thank you very much.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.